Ashish Singh was stunned by the demand for lump sum amount of rupees 40,000 for his daughter's admission in school. He tried to get a loan from a bank, but missing some payments during COVID affected his credit score and banks refused to lend. So he tapped to a P2P lending platform. The delay in repayment of loans during COVID has dropped the credit score of many people. Any bank or non-banking financial institution, that is NBFC, puts a customer with bad credit score on the top of their no-no list. P2P lending platforms, that is peer-to-peer lending platforms, offers a quick loans for people like Ashish to whom financial institutions do not give loans. This is what is making business of P2P lending successful in India. The report of market research company Industry ARC states that the size of P2P lending in India will grow at the rate of 21 to 25% during 2021 to 2026. At this pace, by 2026, this business will be worth $10.5 billion. Now, question is, what is P2P lending? There are around 20 fintech companies in the country that provide peer-to-peer lending. These platforms work to connect the lender and the borrower. Here, no bank or institutions give the loan. But the loan is advanced only from the money of the investors. Investors are the ones who give their money to these platforms to get return on their surplus funds. On these platforms, they get a return of 10 to 18%, which is much higher than the rate of return offered in all small savings schemes. Why people prefer P2P loans? Bhavin Patel, co-founder and CEO of peer-to-peer lending platform Lend and Club, says that individuals in the age group of 23 to 45 years whose monthly income is around 12,000 rupees are most common borrowers on his platform. Such borrowers apply for loan amount in the range of 5,000 to 25,000 rupees. Banks do not sanction such small ticket loans that do without asking for collateral or without checking CIBIL score of the borrowers. But those whose money is used to sanction loans, if they are being promised a return of 10 to 18%, then these P2P lenders recover their share of earning from interest that will be levied on the loan advance to the borrowers. Interest of 6.5 to 9% will be shown on their website. But the profile is prepared according to the ability of each borrower to repay the loan. On this basis, the interest will be fixed. A loan of rupees 10,000 can also be available at an interest rate of 6.5% and also at an interest rate of 15%. Some of the lenders and their interest rates are like this. Transaction Club is giving loan at rate of interest starting from 6.5%. One can get a loan of 25,000 rupees to 5 lakh rupees, which will be required to be repaid in 3 to 24 months. For this, a registration fee of 750 rupees will have to be paid. FairSend is giving loan in the range of 10,000 rupees to 5 lakh rupees at 9.99%. Customer will have to repay the loan in 6 to 36 months. In Lendbox, the interest rate starts from 12%, while OML P2P gives at around 11%. Peer-to-peer platform has to take P2P NBFC license from the Reserve Bank. They should have certificate of registration. The modus operandi of their working comes under the rules and regulations set by the Reserve Bank. An investor cannot deposit more than 50 lakh rupees in such a company. At the same time, a borrower cannot take a loan of more than 10 lakh rupees. The P2P platform cannot be given a loan of more than 50,000 rupees to an individual. Under the mechanism followed by them, all the investment made by a person is used to give loans to more than one borrower for risk reduction. But how risk-free the loan transactions is on such platforms? That is a big question here. Jitendra Nehra, founder Superfine Microfinance, explains that 4 to 10% of loans being extended by P2P lending platforms are in default. Companies make a profile of borrowers' ability to repay the loan, but small borrowers are generally temporarily employed. These people are unable to repay the loan many times because they often lose out on their source of income. It is also seen that to repay one loan, second and third loan were taken and the borrower keeps piling on loan after loan. Money9 suggests P2P platforms act as troubleshooters for borrowers when they are in urgent need of money. The requirement of the borrower is quickly met, but those who invest their money are in greed of high returns need to be careful. In case of default of these type of loans, there is a fear that the investor might lose all his money. Therefore, do a background check of the platform on which you are lending your money.